How's it going, investors? Ari Gutman here with the TipRanks team. And can we just start off by asking what in the world happened within the stock market just within the past couple of days alone? I mean, we were certainly building up a ton of momentum, and before our eyes, all of that momentum vanished as we experienced one of the biggest single-day sell-offs since June, whereas the Dow, S&P, and NASDAQ went for quite the roller coaster ride. So in today's video, we're going to briefly talk about the what and the why of that sell-off before jumping into 3 dividend stocks that could fare investors very well during these uncertain times. Not to mention they're each trading at their 52-week lows, with analysts rating each of them as a buy. So without further ado, let's dive right in. So let's get started with what exactly spooked investors in this recent market sell-off that just happened a few days ago. The Consumer Price Index, or CPI report, which is an important economic metric that measures the average change in prices paid by consumers over a period of time for a basket of goods, was released on the 13th of the month. Now, while economists and investors were expecting 8% inflation, the reading came back and reported 8.3% inflation, sending a shockwave of fear into the market, and it's now more likely that the Federal Reserve will act more aggressively come the end of the month of September to bring inflation down by increasing the benchmark interest rate by more than 50 basis points. With that rate hike decision a little over a week or so out, fear is still lingering, and of course we're likely to see more volatility. However, I am once again here to point out that it's at these times of fear that there may be opportunities out there in the market where you can add stocks to your watch list or potentially buy into some of these stocks that are currently trading at their 52-week lows. That brings me right into the first stock, which is Digital Realty Trust. It's a real estate investment trust that was established back in 2004 and invests into carrier-neutral data centers for small to large-scale companies to store data. Now, in a world that has only ever become more reliant on technology since its founding, Digital Realty Trust has been able to grow a sizable portfolio of over 300 data centers on a global scale. That's across 6 continents and in over 25 countries, which all resulted in their market capitalization amassing to over $34 billion. And we can even expect more growth as long as the company continues to perform well. However, as of the beginning of this year, we can see a steady decline in its share price to $120.17 per share, which is roughly a 30% markdown, if you will. But it is, of course, those investments nearing their 52-week lows that I like to look into for an opportunity, and it looks like hedge funds have been doing the exact same thing looking into Digital Realty Trust, whereas we can see multiple hedge funds pouring millions into this REIT. Most notably, we have AEW Capital with over $79 million invested, or Ray Dalio's Bridgewater Associates investing a little over $22 million. Now, we also see that investors across TipRanks are adding more shares of Digital Realty Trust into their portfolios, as well as making this REIT look even more appealing for the longer-term investor. Now, speaking of, when looking ahead, analysts foresee growth with a target share price coming in at $152.57 per share. That's over 26% worth of upside expected, and of course it's rated as a strong buy. And until we see momentum building back up, hopefully an eventual rebound within that stock share price as well, shareholders will receive a dividend from Digital Realty Trust as it rewards their shareholders with a 3.75% dividend yield. As for our second stock on our list today, I want to bring your attention to Whirlpool, which is a manufacturer of home appliances. From kitchens to washrooms, their appliances are in millions of homes and of course being used daily. Now, since their founding in 1911, Whirlpool has been able to make quite a name for itself and has ultimately become a dominant industry leader, amassing a market capitalization of just under $8 billion. However, it wouldn't have made today's list today unless its share price was close to that 52-week low. So here we are able to see Whirlpool trading for roughly $146.62, where it was once trading for over $232 per share. That's over 35% worth of a decline since the beginning of the year. Whirlpool has been experiencing a ton of supply chain troubles, and of course, they're also battling inflation, which limits buying power for appliances that may or may not be a necessity for consumers at this point in time. Yet looking ahead, past all this near-term economic uncertainty, the potential is still there, which is why we're seeing more and more hedge funds investing millions into Whirlpool, from a $31 million investment from Kensico Capital to just over an $11 million investment from Bridgewater Associates. We are once again also seeing investors across TipRanks buying more shares of Whirlpool as well. So with a lower PE ratio coming in at just 14.4, which is looking better than many similar investments out there within the industry, and analysts who are currently foreseeing growth for Whirlpool with a target share price coming in at $154 per share, which is just under 5% worth of upside. It makes for a reliable, safer investment, especially as shareholders would also be collecting on a dividend of Whirlpool's, coming in at a dividend yield of 4.16%. And finally, we have Seagate Technology, which is another data storage company that was founded prior to the 2000s in 1979. Now it's partnered with some serious names within the tech industry. I'm talking about Intel and IBM, Red Hat, and network optics. Seagate has flourished over the years and has amassed a market capitalization of just over $13 billion. Yet, more recently, it's seen some troubles amidst these market conditions and the interest rate hike fears, leading to weaker earnings reports last quarter especially, ultimately resulting in a stock share price that's tumbled 41.34%, whereas the stock is now trading for just over $65 per share. As of this moment, Seagate has a PE ratio of just 8.9, and more optimistically, the recent hedge fund activity when it comes to this investment, with Ray Dalio's Bridgewater Associates once again being found among the list of hedge funds investing into the stock, over $7 million invested among a couple other hedge funds, making moves and betting big on Seagate. Now, within the last 30 days alone, investors across TipRanks have been adding Seagate to their positions as well. We do see that there's 15.54% worth of upside and a target share price coming in at $75.38 per share, which may be an opportune time to at least add Seagate to your watch list. Now, better yet, at this time, shareholders will be able to receive a dividend from Seagate's dividend yield coming in at 4%. Investors, there you have it, from Digital Realty Trust to Whirlpool and Seagate Technology. Another batch worth of stocks that analysts across TipRanks are rating as a buy and may certainly be worth the add to your stock watch list as we move into these rather uncertain market conditions. Now, just before we close out for the day, our team would certainly love to know what you think about these three stocks, if they're already within your portfolio or if they're of interest to you. Now, most importantly, we'd also love to know what stocks you are currently buying into. Drop all those comments down below, and until next time, thank you for tuning in.